You are listening to chartingwealth.com for Friday, the 23rd of October, 2015. As we always do, we start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. It tracks the whole market. It shows you what's going on in all the stocks in one big basket. And what are they doing? They're continuing to move up. We have a decent trend line that even though it's tried to fall off on the 15th and again on the 21st of October, it was driven up today. Why? Well, some stocks showed a little bit of recovery, but the big mover was the fact that the European Central Bank said they're going to go with another round of stimulus. Why? Because their economy's so bad. Why does that make the market happy? More free money for derivatives trading so the banks can make even more. I know it sounds crazy, but that's the way it is, and that's what drove the market up today. Let's go to the 4-hour chart, and you can see where, even though it was moving down yesterday, it crossed over in the afternoon of the 20th. What happened? Well, the market on Thursday boomed up throughout the course of the day, actually up the total market 1.43%. And it's not quite crossed over yet. And let me show you what's most fascinating about everything that's going on. If we revert to from the 4-hour chart to the 2-day chart, I'll tell those who are listening. We have a big divergence that is set up. Basically, what we see happening in the market, we can see on the 2-day chart, the market is actually reaching higher highs, and we can see where just now the market has moved back up to actually higher on the 2-day chart. When we revert back to the 4-hour chart, what do we see? Well, we cut that chart down and we see over the last month or so, we see where the total market hit a high as far as the indicator went back around the 12th or so. And then it started moving down. Well, the market price-wise has hit an even higher high over the last few days, but the indicators are actually lower, and we have a divergence. It's the difference between the higher high and the higher lows when you compare price to the MACD. So what does that tell you? Well, that tells you that in fact this higher high is not supported by the actual indicators, which means it is possible that you will see that false high move off where it's spiked up to. In fact, if you look at the 4-hour chart, you can see that it's actually moved above the Bollinger Band. We had a tightening of the Bollinger Bands, and as of today, moved well over it. Well, when you see any price movement go outside the Bollinger Bands, it's like going into outer space. There's no air for you to breathe. You have to come back into the atmosphere. That will be happening. That exuberance over the fact that there's going to be more free money in Europe to keep them from totally crashing and burning as they take the Muslim hordes and as their economies dwindle and wither. They're still going to just keep loaning out money, printing money, more fiat currency. It's a scary world we live in, folks. Pay attention, watch what's going on, make the money when you can make it on these up moves, but please be aware now, do pay attention. There was a crossover going down back on the 21st, actually the end of the day on the 20th. It has not crossed over yet going up, which should concern you. That did not happen today. That is Thursday. Pay attention, even with all that movement up, that did not happen on the 4-hour chart. We are still in a confirmed up move on the 2-day chart, and we're still above. We are still above the 2-day trend line. So follow that, pay attention. Now let's go to SPY, Standard & Poor 500. What do we see? Well, we see it driving up to higher highs. We also see its movement above the 2-day trend line. And remember, the SPY is a Standard & Poor 500. It's 500 big stocks in the market. We see it driving up today outside the Bollinger Band, the volatility bands also. We do see it cross over going up, so you have a confirmed up move. that parallels the up move on the big charts. And again, what does that tell you? Well, it typically tells you, hey, that's a good point to look at getting into a virtual trade. The problem is that you are above the Bollinger Band. Could it keep going up? Of course. Things can always go up. They can always go down. So do enter any virtual trade with caution. And when you hear us say virtual trades, remember, we're not a stock calling service. We do not give investment advice. We give advice on learning to trade and making virtual trades. So pay close attention to what you see going on in the market. Now, let's revert back to our 2-day chart. Let's see what we see in the Qs. Oh, and by the way, SPY was up 1.69%. The Qs is up, a big 2.04%. And again, that is on, that's for the daily. We're looking at the 2-day chart. We see a nice solid trend line continuing. We see nice solid up moves in the 2-day chart. If we turn over and look at the 4-hour chart, we again see solid moves. It's not pushed above the Bollinger Band like we saw in the IYY, the total market, and the S&P 500. We do have a crossover in the morning going up, well, into the afternoon. Nice climbs, nice good moves above the 2-day trend line, so continue to pay attention to that. Just be careful and watch out. Let's go back and look. We really don't even have a divergence here. We actually have higher highs. Well, yes, we do. Yes, we do. We don't have a divergence on the Qs. It continues to move up. So watch that. Again, some caution. We are at high highs, but we are paralleling. Once we cross over going up, we're paralleling the up moves in the long chart. So continue to watch that. Now, what is gold doing? Well, let's we'll go to our 2-day chart, even though we don't really use that. We'll go and you can see where gold has actually crossed over the 2-day trend line. It's broken it going down. We don't have a crossover yet on gold on the 2-day chart, but guess what? We don't care, because what do we use for trading gold? We like the 4-hour chart. We saw it cross over nicely back on the 19th. If you would have gotten in with that move, you would be feeling so wonderful in an inverse move in gold. And remember, gold, you can always buy virtually GLD, but there are also inverse gold funds that make money when gold goes down. And that 4-hour chart of ours continues to show its genius. Hopefully those of you who like gold and who like to make money in it, that is virtual money, you have been using this wonderful 4-hour chart we have that continues to shine. It's the most beautiful thing we've got. So anyway, continue to watch that, continue to pay attention. We appreciate you joining us every day. If you don't have this layout for gold, for the SPY, the Standard & Poor's 500, the big charts, the Qs, the IYY, whatever, you need it. How do you get it? You just email us, cw@chartingwealth.com. We'll be happy to send it to you. That is our charting layout at freestockcharts.com. Also, the other thing you need is you need our quick 15-minute down and dirty how to read a stock chart. It'll get you going, understanding things like the MACD, the moving average convergence divergence, the exponential moving average, the derivative oscillator, what candlesticks are, how crossovers work, all those things. So we'd love to hear from you. cw@chartingwealth.com. Hope that you have a great end of the week in your investing.